Hello and welcome everyone to this special episode of the ETBFSI FinTech Diary Season 2 in association with Appreciate. Friends, I'm Amol Dete, editor of Economic Times BFSI and etcfo.com. Today, we are honored to have Subho Moulik with us with over 25 years of experience across multiple organizations and industries. He's going to bring us wealth of knowledge, expertise to the table. Currently, he's the founder and CEO of Appreciate, where he's going to discuss significant strides specifically in the fintech space. Subho, glad to have you.
Thanks for having me.
So to begin with, I understand what the company does, and it's a very meaningful thing because today the market is up. Everybody wants to invest, not only in just Indian markets, but perhaps abroad, or they just wants to invest and grab an opportunity. So now my immediate question is, where are these investors investing? Because when we look at the retail investors, which has what I can say increased from 4 crore to 15, 16 crores in SIP itself within the span of 4 years. And the market we have seen, reach to 85,000. I'm talking about Sensex in just like 1 year.
So let's go back a little in time, right? Historically, we've always had a reasonable savings rate in India, right? And the bulk of the savings went in one of three assets.
Right.
Either it went into fixed deposits, or it went into LIC or life insurance, or it went into gold, right? What you're seeing nowadays is people beginning to understand that while these were traditional bedrock assets, they didn't always give people the right returns. I mean, on an inflation-adjusted basis, they all gave you returns that were less than spectacular, right? And people are beginning to understand that. So what you're seeing is, and this is not new news to anyone, right? SIPs in mutual funds have grown fourfold, right, over the last 7 years. It's despite that the actual penetration is minuscule, right? You're clearly seeing a shift from FD and very conservative risk allocation to equities and other sort of more aggressive risk allocation, right? And what you're also seeing that increasingly you're seeing an awareness in tier 3, tier 4 towns, right? That, hey, I can also invest. So I think you're seeing a secular demographic shift of people moving from conservative assets that give you minimal inflation adjusted returns to more aggressive assets, right? That give you market returns. That's also happening because we have a demographic situation where youth and younger people, right, form the majority of the economy.
Agreed.
So they are much more akin to take more risk. And so you're seeing this grow, right? What you'll also soon see is that people, if you take this naturally forward, people will start saying, hey, where can I get more bang for my buck, right? Like, what will happen? And so concepts like diversification, concepts like, am I really investing in marquee blue chip stocks that I can hold and see significant upside in, will continue to, I think, improve. I think the trading mania that we saw, right? And maybe some people will not agree with me, will maybe die down a little, and people will start understanding that long-term bets are better, especially in equity markets, right? If you look at latest data, 90% plus of F&O investors lose money, right? The other interesting data that we see is that men tend to lose more money than women, primarily because men believe they can beat the market and trade more often, whereas women trade less often and hold. Right?
That is a very extraordinary data point.
So I think we'll see some of that come through over the next 5 years and beyond.
How's the Appreciate shaping up? What kind of organization it is? Just give us a sense in the dashboard in terms of how many people work with you, whether you're profitable, how's your business model, how exactly you're working, Subho.
We have 500,000 plus registered users, of which about 50,000 transact on a monthly basis. Average ticket size on the platform is about 10,000 rupees. And we're seeing pretty good traction in terms of repeat rates. So about 80% repeat rates, which has been fairly consistent ever since we launched.
So the one trend basically when it comes to the investments and specifically the BFSI companies that I have seen is most of the new apps that come into the market manage to acquire customers at a speed. So how do you retain the customers?
So we've actually acquired customers unlike most other apps, which is not by burning a bunch of cash. It's content and knowledge-led acquisition. We're looking to make investing and awareness about investing something that we're known for, to make it relatable.
Tell me one more thing about this. When you are actually trying to invest in global companies, the biggest thing that comes to your mind is the safety, right? Give us some sense on that. How to be more accurate, how to be safe, how to be preventive in terms of investing in global companies.
So I think let's look at the underlying market safety markers, right? The SEC, which is the equivalent of
Yes,
SEBI
yes.
in India, the SEC in the US, is one of the most stringent regulators in the world.
Right.
Any broker dealer, any market participant in the US is required to register with SIPC,
Yes.
right, which is the Investor Protection Corporation. And because of that, if your portfolio in the US is less than $500,000, which is, between 4 and 5 crores, you will get 100% of your principal back.
Okay.
Right? That's in case of any market failure, etc. What it does not insure you against is, hey, I made the decision to invest here, the price went down. There's no price protection.
Yeah.
But if a broker went bust, etc. Also, all securities are held in custodians, right? So, and typically you have to make sure that you choose an option where the security is held in your name. So per se, there's a lot of investor protection built in, right? When it comes to the overall depth of the market, extremely high liquidity, typically, right? Marquee sort of companies, the investor information available because of reporting, because of Sarbanes-Oxley and all of the sort of financial requirements for a listed company in the US, I think it's one of the most transparent, and it's not, there are no efficient markets per se, but it's as close to money as you can think, right? And in today's information age, we have the same information access as anyone. Someone sitting in New York has as much information as someone sitting in Bombay or Nagpur or Ludhiana. So you're not at a disadvantage, right? Ki, oh my God, will I make the mistake? No, you have to then figure out what your strategy is.
So there is one more point specifically now about when we talk so much about investments, and that is also the flavor of the season in India. What are the trends, opportunities, apart from obviously what we discussed in detail about Google, Nvidia, and how to invest? If you look at the current market and maybe take a view of investments for 2 to 3 years at least, what are the trends and maybe sectors and the segments that you see specifically if you take a US as a country to invest? What should people look at while investing in US?
So look, clearly high tech is going to be a continued focus, right? The US continues to be the crucible of innovation in this area. So that's a given. I think there's also very interesting developments happening in biotech and pharma. Is ripe, and some of the most aggressive innovation is happening in the US. The other thing that I think is very interesting is food, right? And then of course, green tech. There's going to be technology innovation because the US is going to try and make sure that their technology bets in sort of green tech are hedged against what China has access to, right? Which is sort of the mineral monopoly China has in Africa, right? And so these are a couple of very interesting areas. The US is about to have another cycle of infrastructure building, right? And then there'll be a couple of infrastructure winners as well. So those are also interesting bets to make.
So while the technology is growing up, I do understand you're in B2C and B2B as well, but let me learn from you in terms of how the whole AI is shaping up and how are you using it specifically to encourage, strengthen people to invest more, maybe using your data far more accurately and perhaps fetching far more better returns for your investors. How are you using AI?
So AI is going through an extremely interesting ethical sort of journey, and there's just been a whole bunch of hoopla around this latest OpenAI model, and the governor in California just vetoed a bill that would look to regulate the AI industry, right? So that's the context, right? So in this context, I think we'll see unexpected developments in AI. That's the bottom line, right? But while we're doing that, there's also a lot of very productive uses people like us can put it to, right? So I'll give you a couple of customer-facing users, retail investor-facing users, and general users we put it to. So when we do coding, for example, right? If I have to write or QC a piece of code, today if you use Copilot, right, which is sort of an AI tool, you can get 60 to 70% productivity on code writing, which is massive for our tech teams, right? If you look at our marketing teams, right, a significant percentage of content is generated by an AI generator and then optimized by marketing teams, right? So there's really productive uses to use AI in marketing, in our technology teams, etc. Right? When it comes to customers, right? We released at GFF. I know you were there. Our first sort of B2B AI product, which was trend identification. We took what was typically used to monitor cancer scans in the brain and applied it to stock patterns, right? And we have a really successful model that can look at stock patterns predictively, right? So we showcase that at GFF. We're increasingly looking to do multi-insight models, right? So stock patterns, sentiment analysis, technical analysis, combine it, right? In AI terms, it's viewed as having different agentic models that bring all these insights together and provide a recommendation and also enable automated trading. So that's on the horizon, which we'll announce in due course. And especially with our investors, right? If you're looking to make a trade in New York, right? When it's 11 a.m. there, you're looking to go to bed, right? When it's 3 a.m. or 3 p.m. there, either you're fast asleep. So having AI automated and having AI provide support is going to be a pretty big opportunity for us. Right? The way I term it, right? Let's make millions while you dream. Right? So that's what we're looking to roll out over the next 6 to 9 months.
Okay.
And so you should stay tuned for more on us on AI.
Certainly. In fact, that was really, really meaningful. In fact, extremely insightful. Thanks for, giving us those highlights about AI. But, there is one thinking that the Indian investors has, ki mera paisa kitna banega, right? Whether I will be profitable, where is the next multi-bagger? That's what the Indian investors are looking for. I'm not asking you to tell us whether AI will actually predict that, but will AI help people maybe identify a couple of stocks to at least prevent their risks? And how do you see the whole AI helping people in terms of making right decisions? Because sometimes, like you said some time back, a lot of people, almost 90% are losing money in FNO, right? If something of that sort can be avoided with a great content, great usage of AI, something like that you see happening?
Yeah, so I do think automated trading recommenders with sort of thresholds that you can set will help people avoid silly mistake that leads to losses, right? Now, remember, AI will typically work within the guidelines of what you want it to work on, right? So if you want a short sell strategy, it's not going to suddenly give you long bets, right? If you want a long-term strategy, it's not going to trade frequently, right? So, but within the strategy you want to, I think AI can make investing more efficient. AI can also help you factor in the right timing, right? Because look, you have a day job, I have a day job, right?
Yes.
Very few of us are looking at the market through the day when we're also working on our day job, right? Whereas with an AI model, that's looking at the market 100% of the time, right? So it helps you become, I think, more opportune so that you can capture the right decisions you need to make, right?
Agreed.
And also look at far more data and provide you a comprehensive analysis from a longer term bets. Right? So that's possible. I don't think that's possible today, but if you look out 9 to 12 months, I think increasingly you will see products, including from us, that provide that support.
Sure. About you yourself, you told us what exactly you're doing, how you started, how many people work with you. You told us about your product also and gave your views in terms of how the Indian fintechs are. But if I specifically ask you, what next for you? How do you see yourself maybe in next 3 to 5 years? What is the vision that you're carrying? Considering at the background, India is also going to, grow very significantly, and maybe in next 5 to 6 years, India's economy will also be doubled, right? So considering that, where do you see yourself maybe in next 5 years?
So look, our thesis has always been that we identify a space that has significant potential, but there's something broken in it. So we started with overseas investing where, we had the conversation. There were many things broken in that transaction, and we started there. We think there are things we can improve in domestic investing as well, right? So we'll soon be announcing a few domestic investment launches, and we'll bring that same innovation mindset to that, right? The other thing which dovetails well with your statement about India being like, third largest economy growing is we believe that outside of the US, India is the foremost bright spot in the global economy. And so increasingly we'll figure out how we can bring foreign investors into India, right? From a retail perspective, right? And how do we get money flowing into India? And often foreign retail investors actually stick here, right? Flight of capital does not happen. So how can we actually do that, right? And then we also think there's opportunity in credit. So we'll make some credit announcements as well. But again, in a very focused space where we think we can make a difference in actually making the transaction happen better.
Well, on that note, Subho, thank you so much for those valuable insights. And I must say that was a great wrap with this particular insight, specifically on the show of ETBFSI FinTech Diary in Season 2 in association with Appreciate. Thank you so much for staying connected with etbfsi.com. For more updates, be sure to follow etbfsi.com and stay informed, stay connected with the industry news and insights. I'm Amol Dete, signing out.